Hello there.
Would you like to get paid every time somebody has a cup of coffee? I know I would. Well, for the low price of £25, you can have your own coffee empire. Please don't roast me in the comments for these puns. Welcome to the show. Let's check up on our entire investment empire, battle a few coffee companies against each other. This is Battle 13. I'm the Gentleman Investor. Let's invest. As always, we're going to reveal who won last week's battle. We're going to check up on our portfolios and we're going to battle two stocks against each other. Without further delay, let's get underway. Right, let's take a look at how our portfolios have done this week. By way of reminder, it's £25 into three portfolios. One portfolio where you tell me which of the two battling stocks has won, one where we compare that portfolio against the market, and one where we generate income to pay you money.
Here's how we had done last week. £275 added to each portfolio. The Battle Royale doing nicely, 6.89% gains, beating the benchmark at 3.41. Let's find out how they got on this week. Here we can see that the Battle Royale underperformed the UK market last week. The UK market was up 2.2%, whereas the Battle Royale was only up 8%. That doesn't bode well for beating our benchmark. We've still got 11 holdings because I've switched over to investing on a Monday as opposed to a Friday to hopefully get a more accurate track record of how we've performed. What's interesting this week is that there's a good mix of green and red. That hasn't always been the case. Tesla still doing well, another 9.9% added last week, and the total return for that stock is 62%. That is crazy. Our worst performer is B&M, the UK budget retailer, and it's down another 8.5% to 15 overall. Another honorable mention is Nichols, still performing the second best, 22% up overall. That's how they're doing. I can't wait to add the next stock and let you know how that goes. Switching over to the benchmark now, the Vanguard All World, which is the VWRP. As you can see, it also underperformed the UK market, going up 1.7%. Still in the green, so I'm still happy. And finally, let's take a look at the income generator. It is up 1.8%, so one of the better performers actually. Everybody in the green this week. And finally, I'll rattle through this one because there's no change from last week where we had invested on the Friday. This time we're going to invest on the Monday. Overall, £8.45 per year and still projecting 163 in December and 148 in March. And here's how our three portfolios are looking overall. Last week, the Battle Royale ahead of the benchmark. This week, the same story, although it's performing even better, 8% up overall, £293 in total. Very happy with that. And the benchmark up a lovely 5.28%, all going well.
3, 2, 1, fight.
Do you feel ground down in the mornings? Well, wake up, have a cup of coffee, and come on over to the darkly roasted side. Let's see which coffee stocks are available and are out there to invest in.
I've found 5 companies I suggest we have a look at. The classic Starbucks, of course. What else do you think when you think of coffee? We've also got Nestle, Dr. Pepper, J.M. Smucker, and Black Rifle Coffee. Starbucks, everybody knows it. It's going through a new period with a new CEO. Lots of positive things from him. Is this already priced in? Is it a little bit risky? Well, we wait to see what he's going to do with the brand. All very good questions. And next up, we've got Nestle, which is apparently, according to Simply Wall Street, trading at 55% below its estimate of fair value. If you look at the little snowflake it's got a very good dividend, good value, and a great history. Simply Wall Street doesn't think too much of its future, however. Dr. Pepper, a slightly slimmer snowflake, but it does think that it's trading at 49% below its estimate of fair value, which is quite incredible. J.M. Smucker, 69% below their estimate of fair value. Again, this is not the be-all and end-all, especially when you have a look at its snowflake with not great future and not that healthy financial statement. Black Rifle Coffee, very thin snowflake on the bottom, staying very far away from any dividends. It's pretty healthy though, but doesn't have a great history. So how do we narrow this down? We would go into each of these in a lot more detail, and for me, I like the look of Nestle. It's such a well-known brand. It's a well-known brand in the home. Everybody uses it. Everybody knows it. 55% below fair value is fantastic. And although Simply Wall Street doesn't think too much of the future, it's not going anywhere. So there is that stability to it. And it does think that its earnings are going to grow at 5% per year, which, with all the macroeconomic conditions and difficulties regarding discretionary spending, I don't think that's a bad thing at all. And I'm going to, for fun, compare that to Black Rifle Coffee. It's a little bit punty, but that's what this portfolio is for, to try and take on the market. And this has got a great future and trading at 87% below their estimates of fair value. Let's take a look at these two in a little bit more detail.
Now that we've narrowed it down, let's take a look at their high-level metrics.
All right, here you can see Nestle and Black Rifle Coffee compared side by side. What I've also added this time is their 3-year stock graph. I've added it because you can see from Nestle it has not had a good 3 years. That has just been considerably plummeting. So would we be catching a falling knife with this one? Is it a good investment just because it's cheap? No and no. So that's worth looking into. And Black Rifle Coffee, it's behaving like a startup with a peak at the beginning and been flat ever since. So I think these are two sort of very risky stocks to invest in. If we look at their underlying numbers, Nestle, as you might expect, a really large company in the billions. It does pay a lovely dividend yield of 3.95%, but again, if everything's declining, that doesn't help you very much. Black Rifle Coffee, quite a small company, 233 million, and with small companies comes high risk and volatility. As you can see, the earnings per share is in the negative. So how much do we think this is going to be profitable? That is the question. Between the two, as I say, I think they're both risky. I think we should go with Black Rifle Coffee. It's a little bit of a punt, but if it starts to take off, we could make some nice money out of this one. Not a great week for stock picking.
So who should we invest in? I think it should be... So there we have it. What do you think? Is that the right decision? Would you invest in any other coffee-related company or stock? I'd love to hear from you. Let me know in the comments. Thank you so much for watching. I appreciate having you here. We'll see you next week.
Goodbye.